Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Good morning, everybody, and welcome to the Friday morning edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had an amazing trading day yesterday as we are getting rolling on our last day of the week. For those of you new to the channel, do me a favor, smash that subscribe button, push the little notification bell, whatever it happens to be, so that you get the alerts and the updates as they come available. For those of you not new to the channel, do me a favor, leave a comment, leave a like in the section down below. We'd love to hear exactly what you guys are doing out there. So let's go ahead and dive right in. So in the S&P, we are down a little bit this morning, about 11 points. It's funny how 11 points is now a little bit. You know, it seems like a little bit used to be a point, 1.5, 2, but now, yep, 11 points is a little bit. So we're down a little bit this morning in pre-market trading as we had this little bit of a sell-off here right around the European market open. European market open sell-offs I always find pretty interesting because when the market opens in Europe, those tend to become pretty reliable levels and some pretty reliable turning points. So as we've rallied up over the course of the last few days, we've had a few 15-minute supply levels that have been unable to hold, but really we haven't made it up into any high quality hourly levels yet. And that the first one to test would be up here at 27.69 by 27.83. You know, as we came up, we had a few confirmation style entries that went through that never met entry as price just kind of continued to rally. And so now we've maybe slowed down in momentum a little bit after Fed Chairman Powell's comments earlier this week. You know, we had this parabolic straight up move, and then yesterday we had a nice rally there towards the end of the day, but we're unable to hold on to those gains, and we've sold off just a little bit from there. So what am I seeing for Friday? Well, interestingly enough, I've talked a lot about the Friday swoon and so many markets that sell off at the end of the day on Friday, as a lot of times people just aren't willing to go home with risk, right? The G20 summit coming up, a lot of those things. You know, if you're not willing to absorb the risk, you shouldn't be in the game. So you may not want to hold something over the weekend, depending on what comes out and what might happen to be said. So looking at this, we have we've got an area here that we have bounced off of and then rallied up, and now we've come down to it again. Now the reason I'm highlighting this is not because I want a reversal trade off of it, but in fact just the opposite. I'd like to see us see if we can, we base around through here. If we do, there's room for price to fall down to 2,700 again. If we break below some of these candles lows, then that would be our next area for price to begin move down. This would be the area where we say, okay, we've lost our support. There's not enough buy orders left here, and that's where we would see price begin its downward movement. So I'm not looking for that as a reversal opportunity. I'm looking for that more as a potential for a breakdown into this 2,700 area again, which would be the origin of this last move higher. That's the easier money trade, would be the breakdown below that area. My only fear is this little wick over wick level. So we might have to make sure that you're through that wick over wick level before you get a true breakdown, right? That little wick over wick area is something that is pretty important. So what if you want to trade a reversal to the short side? Well, I think if you want to trade the reversal to the short side, if you think you want to play it going down to here, it's a little bit more risky because you still have this demand down here to contend with. But if we move down to a smaller time period, call it a 15-minute chart, the origin of this move down here, being right around the European market open, you may want to use this area here for a potential reversal. So I'm going to leave this one in a purple line, remembering that a purple line means that we've got a slightly lower degree of probability, but I'll leave this area in, and that could be an area for a potential reversal at some point during the day. Next, Nasdaq. So in the NQ. Now in the NQ, we had a 15-minute potential reversal level here. Price came up into it yesterday, and we were not able to hold that level. So that one did break through, unfortunately. And so now we're looking at our next hourly level up above us. This to me serves as what I would call a bull trap in many ways, simply because it's a resistance breakout trade with no room to roam, right? Those of you that have watched the videos that I've done on breakouts know that the rules on breakouts is I need a level that's been touched 3 times or more, but most importantly is I need room to roam. And right now I don't have room to roam. I got a small reversal opportunity just above me here. Now, this area above me here is not I'm a little bit more concerned with it because it's a wick over wick level. So first of all, being a wick over wick level is a smaller level. And your better area might be the one a bit higher, somewhere up in here. So what I'm going to do for now, while I still have that 7,000 area in place, I'm going to switch it to a confirmation style entry because it's in, kind of the middle of this bigger move down. And then I'm going to put the limit style entry in play up above it. Now the limit style entry that's going to be in play up above it is also a very important opportunity and entry. And the thing I like about it is that it was formed right around European market open. Levels formed around the market open are going to be better levels for me historically. So for now, what I'm going to do is, just because I've got a whole bunch of lines on here, I'm going to remove this one up above. And I don't normally like to remove too many of the lines. I've got a lot of them on there though, because we have a lot of areas that just never got retouched, right? Never got a retest in it. So, oops, I'm gonna get rid of that. Sorry about that. So I've got this area here that's not been retouched, and so I'm gonna leave that one in play. So for today, what I think is you could use this same setup. Just like we had in the S&P, right around the European market open, this area up here for this 15-minute level. All right, crude oil. Let's move on to crude. So moving on to crude, this level up above here, we already had a confirmation short that worked out pretty well, and now we still have this level up above here that's not yet been touched. Now, I will say that this is setting up more for continual bearish movement, but if I go to the 4-hour chart, we've actually slowed down our downward momentum. If I throw an indicator on there, and the only reason that I throw indicators on is just to be able to see momentum, right? And what I'm looking at here is I'm looking at significantly higher lows in momentum, but lower lows in price. That's actually usually a bullish signature, okay? The fact that we've got that bullish divergence, this would tell me that we may actually see a bit of a reversal coming back to the upside, and so it makes this this level up above here a little bit scarier to take. And so what I'm going to do is I'm going to switch that actually also to a confirmation style entry because of that momentum change. Momentum change isn't going to be enough to get me into a trade, but it's enough to at least make me think twice about getting into one that the indicators are telling me the opposite side. So I'm going to switch this to a confirmation style entry as opposed to a limit style entry. Now, is there an opportunity for a breakdown? Technically, yes, there is, based on this price set. I'd like to see a little bit more sideways price action. If you have paid attention to crude oil over the last few months, well, last few weeks, what you'll notice is that when we have had our breakdowns, it's come off of very tight 4-hour windows, right? That was a very nice breakdown. This was a very nice breakdown. This was a very nice breakdown. These are very tight 4-hour windows. Here was a little breakdown. This is not a very tight price window, right? It's a much bigger price window. And so I'm leaving this breakdown out. I don't think that that's, a breakdown that I'm going to want to use. So I'm going to, for now, look at the reversal up here, and I'm taking it with a little bit more caution. Gold. So looking at gold, we had a huge spike up. We've seen price come down just a bit in the last in the overnight sessions and a little bit into yesterday. I really don't have a whole lot I want to add in gold right now. We actually just took an iron condor trade in gold inside the trading room the other day, and it worked out really well because gold's going sideways. So when it's going sideways, that's why we use options and iron condors. So those of you that do you use options on futures? Leave me a comment down below. Let me know what your thoughts are on options on futures. But that was the trade setup that worked out really well because the 4-hour markets are telling us, not a whole lot happening. So I don't want to force a trade if I see that occurring. Looking into the bonds and currency markets. So in the ZN, now I did anticipate a better breakdown out of here. This breakdown obviously did not hold. And so that 119 breakdown, unfortunately, wasn't able to hold. However, our reversal off of this entry was a really nice hit. We hit this entry, and then price came down out of there really nicely, right to the opposing fair price value area. So that level worked out really well for those of you that jumped in and wanted to nab on that one. It's the second time through. It's still a valid level, but the second time through, I need to convert it to a confirmation style entry because we've already hit it once. So the first time a level's hit, I'm okay with it. The second time I converted to a confirmation style entry. So this worked out really well. Hopefully you're able to nab that. That was about a 5-to-1 reward to risk trade. So that one worked out for the better if you were in there. Now the Aussie on the huge run that we had going higher is now showing a little bit of weakness up here. And so the Aussie I like for a potential reversal. If we get one more thrust back up into this region. I'm not so sure that we will, and we could actually be setting up for a breakdown below this area. So, both are very valid and potential entries. The reversal up there or the breakdown below here. I wouldn't take this breakdown below here, though, until I see a little bit of basing before the line. Without basing before the line, the breakdown's irrelevant. So if you want to trade the reversal, it's up here. The breakdown is right here. Now on the 4-hour, this is still basically sideways price action. Right? So there's slightly more risk in doing that trade because it's against the big picture price direction. Looking at the euro level, obviously on that parabolic move up, we went through that little 15-minute level, and it has a very similar price action right now to the Aussie. So I'm going to leave this thing be at the moment. I don't want to add any levels that are too similar to what we have in the euro because the price actions the Aussie and the euro have very similar price actions, and so looking at these two, I'm gonna trade the Aussie over the euro because I think it's a little bit cleaner, although this reversal is still very much in play inside the euro. Canadian dollar has actually already begun to roll over before the Aussie and the euro have, and that's why it's one of the things that I'm using kind of as a probability enhancer on my other positions. When I look at the Canadian dollar here on a 15-minute chart, it actually put in a really clean reversal level right here. So the opportunity is there if we get another shot back up to take this here, remembering that it's in purple just due to the 15-minute time period. All right, and last but certainly not least would be the Great British Pound, Japanese Yen, copper, nat gas. What you'll see here on copper is that we had a potential short on a confirmation style entry, and look at how we did. We popped right through it, so no entry. In parabolic moves, if you have a directional bias and some sort of news announcement causes a directional bias, you will have stops that get blown through. But if you have confirmation style entries, then ideally you won't get filled on most of those trades. And that's really one of the reasons that I like confirmation style entries. They keep me out of more trades than they get me into. And typically they keep me out of a trade. There's a structure behind why I want to stay out of the trade, just from a risk perspective. Looking at the Great British Pound, we've got a reversal level here that had a really nice move down. Not sure if you guys got filled on that position or not, but now we are still in between some decent little areas, some decent little levels. And then in the Japanese yen, our 15-minute level has not yet been hit, but there's really nothing else that I want to add to this one, as none of these are high enough probability that I'm going to be wanting to force a trade. So ultimately, that's there's enough to trade on these 4 markets right here over the course of the next day or so. But it's over a weekend, so always remember that over a weekend is the biggest risk trading periods. So because you never know what announcement is going to happen over a weekend. Now, we found a number of good equities positions yesterday, and one of them I do want to highlight. I promised that I would highlight it, and frankly didn't get around to it. Was a short. So when we're looking at a short in this equities position, the one that I was going to focus on was Amazon. And so looking at Amazon, I had really felt like we were going to possibly reverse below this area here. However, we gapped up above that area. See, this gapping up above here was very interesting because we gapped up above it and continued to trade higher. Okay, so by gapping up above this area off of our overnight Fed announcement news and continuing to trade higher, what it did was was all of a sudden our bearishness may have said, you know what, we may have to take a slight hold on that. Now, we were in a clear downward trend. Lower swing lows, lower swing highs. We had broken the upward trend. I'm still in a downward trend. And I'm still in a downward trend because I have lower swing lows as well as lower swing highs, right? Gapping up above here, this would have been the ideal entry, but it doesn't mean that we have changed our overall trend direction on the daily chart. The only way that I'd be able to change this trend direction is if I put in a higher swing low and a higher swing high. So as it stands right now, I have still got lower swing lows and lower swing highs. If I look at my last 2 swings, this is a swing low, swing high, swing high, swing low, swing low. Those are my last 2 swings. Now, this technically isn't even a swing yet, right? This is not a swing. But if we do get higher than this, if let's say we get higher than this price level right here, then by definition, I'll have a higher swing high. I would then need to put in a higher swing low for me to have 2 consecutive higher swing highs and higher swing lows. And that's how I determine trend direction. I'm not a big, user of moving averages to determine trend or to quantify trend. I primarily will use the swing highs and the swing lows because those tell me a lot more. So I haven't changed my overall bearish stance on Amazon. There's no reason to do so yet. However, my entry has to be a bit different, right? My entry now is going to be more of a probably candle-to-candle style entry on Amazon than it would be just simply taking the reversal, right? Same thing for a stock like Netflix, right? A stock like Netflix, we're in a potential reversal point. I've got lower swing lows and lower swing highs. I'd need to go a candle-to-candle style and knock it short until I get lower than this next candle's low. And that's really just due to the fact that the market's, getting a little bit of footing underneath it. But a lot of these FANG stocks are some of the ones that have been the more bearish ones that are dragging the market down over the last couple of days. So I don't normally go into individual equities in this session, but and then we build options trades around those. I'm much more suited to trade options, especially around those higher flyer stocks. So if you've got any questions, please send me an email, support@tradersarmy.com, and I will talk to you all soon. Have a great weekend, everybody.